Market veteran Manish Chokhani shares his big themes with ET now as he highlights India's growth in AI, EVs and energy as critical for global competitiveness. He sees long-term value in PSUs like SBI and BOB, cautioning against overhyped sectors like defense. He believes that India's richest days lie ahead. Listen in.
Is the party over in PSUs given the recent leg of decline?
Some of them, like the defense PSUs, railway PSUs, a lot of the capital goods PSUs, I think it got a bit too euphoric because they were so under-owned. Because there's no one who comes in the middle and the stock keeps trending up, and as a retail investor, you don't really know better. And when you see, say, a 50% earning growth, you think 40p multiple is okay. So all of these, I think, went to excesses. And a lot of stocks which have now corrected 30-40% over there, they are still up 150% for the year. After correction, they may be up 80% for the year, but no one has felt the pain over there as yet. But like I said, you don't make these kind of returns in a stock. Eventually, stock returns will track what earnings will do. You are not going to make those kinds of returns over there. PSU financials, on the other hand, they did participate in the beginning, but it was really a rate of change on earnings. You remember the time when the entire PSU banks were equal to market cap of HDFC Bank. Then they caught up.
SBI.
Yeah, put them together, and you take all of them together, and you just see they have only performed in line with earning growth. The PE multiples, I was just shocked to see SBI, BOB, PNB, Canara Bank, Union Bank. These are the top 5. SBI still may have a 8 multiple. The rest are like 4, 5, 6 multiples. These businesses will make 15% ROE. They're paying you nice dividends also. So there is a rate of change which is there. The market's a bit worried on banking. Oh, everything is so good. But we haven't paid for it. So like a lot of my friends in the market, I think financials is a fantastic place because we all got distracted and went away to rightfully to the capital market space where brokers, fund managers, wealth managers, mutual funds, all have done superb. But again, it's part of a mix. Even today, I will have some of my money in a bank and some of my money in a mutual fund, whereas we tended to go all or none. So life is never like that. So you build a portfolio which is balanced. I think there's a lot of money to be made here because the bets are still asymmetric on the banking side, including the best. We made HDFC Bank has become a meme like ITC used to be, right?
Yes.
So it tells you that the time will come. The issue with banking, I feel, is everyone owned it. And if you take banks as 20-25% of market cap, it's $1 trillion. And $1 trillion, almost all of which is free float. So it takes a lot of money power to lift it. I think the climax of banking will only come when foreigners return. It's not that it's going to happen next year just because it's not performed last year. It may still be a long haul. But for people like me, like I always say, I'm a farmer, I plant my seeds. And as long as the crop is growing at 15%, the longer it takes to grow, the better for me. Because I don't need to get validation every week, every month, every year on my stocks. If I get a climax, eventually 5 years later, when the 5p stock becomes 25 and the earnings have compounded and doubled, you make a 10x.
So I go back to that original point. The PSU basket which we've classified into, let's say, hard assets, metals, that would include, let's say, an alco and
so
others.
Again, I don't think you should put them into a bucket. It's like all PSUs did not participate. Same way all PSUs will not fall.
And within that, you think banking will fall the least?
Banking is not going to fall. I don't think there's room for banking to fall. And if it does, then you should go and buy it by the truckloads. But like you mentioned, say metals. Now, if there is inflation in the world, the underlying earnings that a lot of these companies may deliver, it won't be the old industrial like iron ore and all because there's too much steel in the world. But the non-ferrous and certainly the precious side, there's a lot of money to be made there. Like Coal India, nobody wanted. The world has forgotten about ESG because you need energy. India needs to transition, and that's the second biggest theme of India, is this whole energy transition, power. We didn't invest for 15 years. Now you're facing power shortages, the transmission companies, the solar companies, tremendous amount of money to be made here.
Energy transition is the most discussed word in boardrooms and even by market participants. What is the right way of understanding energy transition? Is it solar? Is it hydrogen? Is it EV? It's a multi-year mega trend. How can one maximize by participating in this architecture of energy transition?
So let me take one step back, if I may, that if you think of what is technology, is basically replicating the powers of the human, right? When I think of AI, it's making my brain more powerful. When I think of energy, it's effectively how the heart powers us. When you think of biotech, it's really the design and the body of my biology of my body, which is going to take me ahead. AR and VR is improving my eyesight. Sensors are improving my sensory touch and feel and so on. Now, in that context, we cannot become third largest economy in the world if we are dependent on a pacemaker from somewhere else. Our own energy source has to be with us. You saw how US came back big time when they discovered a lot of oil. Otherwise, they used to keep looking at Middle East. They don't anymore. China, what it's done strategically to go and buy out all these energy assets and transition dramatically into solar, lithium, EVs, batteries. They own this entire chain. That's why they are ahead and they will stay ahead. If India doesn't fix this, it's a fundamental problem. Number two, like we missed the industrial revolution with the advent of the machines, which made labor irrelevant. If we miss the AI revolution, which is going to expand your brain power 100x, we're going to, I don't think this linear forecast that we are becoming third largest, second largest will play out. So the two central areas which you will see a lot of the large industrial groups and the government very exercised about is actually this whole area of AI, and semis and all are just a beginning in that direction. We are 20 years behind, so a lot of catching up. Biotech, which we really have to catch up, and energy. And in energy, the large users will have to go hydrogen, the small users will end up with lithium, and for our homes, it will have to be solar. So all three have to play out, and you must have some bets in this space starting out. Don't ask me for names, I won't give you a name. But if you are not invested over here and you don't have, say, 10% of your portfolio in this space, if you don't have 10% in, say, biotech, and you don't have 10% in technology, you're doing yourself a disservice on a 5-10 year view. There will be times when these will also get overpriced, they will crash, but you should go in. But as a portfolio construct, you have to think, I need some bets over here, just to not only ensure my future, but also our country's future.
But in terms of the great energy transition, it's the big corporates who essentially are betting on it. For example, Tata Power,
yes,
they would be expanding capacity.
They're doing a fantastic job, yes. Adani, fantastic job.
Fantastic.
Reliance is on the game. Jindal's in the game. So all the big houses have realized it. And sometimes, like you say, you follow people who are smarter, wiser, and putting their money where their mouth is. I think it's certainly showing up over here.
I move to the question which you have always argued, something which is very one of your favorite topics, which is the profit pool. Let's look at India's current profit pool. Again, this is data which we've this lot of this stuff is MOSL and some of it is their proprietary data. The large profit pools in India are banking,
yes,
autos, IT, and consumer.
No, I'll correct it slightly. Actually, the top 5 sectors, banking is number 1, IT is number 2, what I call energy, utilities, the hard asset commodities is actually 3. Then you can think about consumer, and then finally you think about the industrials. So in terms of profit pool, banking and technology are going to lead like they've shown in the world. Because as you move from agriculture to industry, you move to services and then to the highest value added form, which are really these two. What the players will be, who the leaders will be, of course, you have to keep thinking about it all the time. But for example, our current IT services companies have to morph. They are like the old IBM. They are not even the Ciscos, and you have to get to being the Amazons and the Nvidias and the Apples and the Microsofts. That transition is there for Indian IT, which will happen. The youngsters are there, and the new Infosys are being born as we speak, while the old ones will have to reinvent themselves. And I also did mention this whole biotech space is going to upset Indian pharma. So these profit pools which you're thinking, like I say, if you're not positioned over there, I think you're going to do yourself a disservice.
Okay. Then I move to a next point which you've always again debated in the past in a framework, which is that market price is a function of PE and EPS. Where do you think there is scope for PE to go higher and PE to go lower?
So a lot of the cyclicals which have played out, it's very clear, right? You're seeing 80, 90, 100 PE stocks, including, I would say, consumer discretionary even, like darling stocks. Nothing wrong with the companies. Trent, Zomato, all have done spectacularly well, and managements which I salute. But it's like the mistake we made in the IT boom. If you pay a high price for Infosys in 2000 March, 45 billion has become 92 billion today. Rupee halved, so it's become 4 times, but the market's gone up 14 times. So it's not like the companies won't do well, but valuations we are paying across consumer discretionary, property, capital goods, even some EMS, It's a great sector. We spoke about it last time I was there, but I mean, come on. You don't pay 60 to 100 multiples for businesses which are sub 20% ROE. So you will get a growth premium for a certain period of time, but the day your growth slackens, you don't go from 60p to 15p overnight. You get slow deterioration in that, correct?
Okay. Now, when it comes to EPS, I will shamelessly steal a cycle from Ashwath Damodaran.
Sure.
He says that the companies can be divided in 4 buckets.
Right.
Bucket number 1, infant, youth, mature and declining curve. If you have to look at the EPS growth, which is the earnings growth for next 3 to 5 years, where do you think there is excitement and where do you think there is a maturity or a decadence which would kick in?
I don't think there's excitement right now anywhere other than the new age companies, because they will grow at a rate of 150%, like say a Zomato or even a Nykaa or whatever, all those companies are there, Mama Earth and so on. They will all grow at a spectacular pace. We've paid a lot for it. So, I mean, net, we can, you can try me this way, that way and the other. The fact is, this is a market which is priced to run to perfection today, by and large. Other than financials, maybe some metals, some PSUs, it's not a period where you can build your entire portfolio. It's not a period where I say sell my whole portfolio and go on cash. It's not excessive. It's not a period where I can say everything is so darn cheap that I can build it and I wish I could take an overdraft as well. It's not that either. I think stay calm, stay the course, have the right allocation. Within that, keep the right mix of large and small. Within that, keep the right position sizing. Within that, keep the sectoral allocations. As long as you do that, you will beat the market. This market compounds at 14-15%. It doubles every 5 years. It quadruples every 10 years. If you do that, believe me, we are all living examples in our generation of people who came with nothing and have built significant wealth. I'm saying 90% of India's wealth lies in the next 20 years.
The peak of an entrepreneur comes after he turns 40. And there have been instances from tracking Mr. Deepak Parikh's career to Mr. Murthy's career to Raju Bajaj's career. Yeah, of course. So it all adds up beautifully. But that's passe now. Like you say that in market you have to bet on the future and learn from the past. Which are the next leg of promoters who you think fall in that 40 criteria according to you?
Karan, for example, built a fabulous wealth business over here. In the last decade, I think you're showing me now Jasbir, who Amber is a investment which everyone has been very, very happy about. Neville, of course, has built DMart into something spectacular. You're reading out, yes, Sudhir at Godrej, which we don't own, but I'm sure he'll have the best years ahead of him. What Abhishek Lodha has built for Lodha, I think if I'm not wrong, it's what a $10-12 billion market cap now. From remember the troubled days of 2008
almost on
to
the
where,
brink of existence
and
of
at a
existence
young age. So it's like all these people are in the peak of their life, like Ravji Jain of the last decade, how he built Bajaj Finance and what that group has multiplied to. So there are enough of these people, and that's what I say, that you always skate to where the puck is. And I'm seeing you're calling out all these names from my old slide, but you've presented it more beautifully. Chandra was not 50 in 2010-11. I think he's what, 63, 64 now. Yeah, so there's enough to be done.
So this entire 40 template
see,
could be a hunting ground.
the thing is, in the 30s, you have energy, you may not have wisdom. By the last decade, where I'm also there, you may have the wisdom, but you may not have the energy. So that 40 to 50 period, I call it the golden era, when you're wise enough not to blow yourself up and you have the energy to go and build. And the thing, after that, you try to become more famous, right? You want to be heading CII or you want to, something like that. But the period of wealth creation is typically 40 to 50. So again, there'll always be examples other way. And I think it's getting younger now with all that, tech entrepreneurs who are coming out. But I think that story is here to say. I don't know how old is Dipinder Goyal, for example.